Silver has officially entered its main character era. At around $115 an ounce, it's no longer the quiet sidekick to gold, it's the metal stealing the whole show. So, what on earth happened? Let's break down why silver suddenly thinks it's a tech stock, a safe haven, and a geopolitical weapon. All at the same time. First, the money side of things. Investors are betting the Federal Reserve is going to cut interest rates by as much as 1.5% over the next couple of years. When rates fall, the returns on cash and bonds drop, and suddenly metals that don't pay interest don't look so bad anymore. Silver goes from "why would I hold that?" to "wait, that might actually outperform my savings account." And with the Fed holding rates steady for now but hinting at future cuts, markets are basically front-running the move and piling into anything that looks like protection against inflation and uncertainty, including silver. Now, that would be enough to move prices on its own. But silver has a second personality. It's not just a financial asset, it's an industrial workhorse. Unlike gold, which mostly sits in vaults and jewelry boxes, silver actually gets used up in the real world, and a lot of it doesn't come back. Start with solar. Every solar panel needs silver for its electrical contacts. Think of silver as the nervous system of a solar cell. Without it, the electricity goes nowhere. As the world scrambles to build out solar capacity, you're talking hundreds of gigawatts of new solar coming online, year after year. Multiply that by grams of silver per panel and suddenly you've got a huge, steady, non-negotiable demand source. Governments can promise green transitions all they like, but the panels don't work without silver. Then layer in electric vehicles. EVs use more silver than traditional gas cars because they're basically rolling computers with heavy-duty electrical systems. Every sensor, connection, and control module is a tiny silver consumer. As EV adoption climbs and countries set deadlines to phase out combustion engines, that becomes another structural demand pillar. It's like giving every new car a small silver subscription. And we're not done. All the AI hype? The data centers, high-performance chips, ultra-dense server racks, those aren't just powered by marketing buzz. They're powered by electricity, and the hardware that moves and manages that electricity uses silver. As computing power and data traffic explode, so does the demand for the metals that make all of that possible behind the scenes. So, you've got money flows and tech demand pushing in the same direction. But the real fireworks start when supply can't keep up. Silver production is in a tough spot. A big chunk of silver is produced as a byproduct of mining other metals like copper, lead, and zinc. That means you can't just say, "Silver's up, let's instantly mine more." If the main metal isn't worth producing, the silver doesn't show up either. On top of that, some major mines are facing shutdowns or cutbacks thanks to rising costs, environmental rules, and political risk in key producing countries like Mexico, Peru, and Chile. Less mine output, more demand, that's not exactly a recipe for cheap metal. And then there's the inventory problem. Stocks in major exchanges like COMEX and in key hubs like Shanghai have been trending lower. When physical metal starts leaving warehouses faster than it's coming in, anyone who actually needs silver, refiners, manufacturers, mints, has to compete harder to secure what's left. That's when you see premiums rise and futures markets get jumpy. Thin inventories plus nervous traders is how you get big, fast price moves. Like the one we're watching right now. China has added even more spice to the story. By tightening export controls and treating silver more like a strategic resource, it's effectively saying, we might need this for ourselves. That matters because China is a huge player in refining, manufacturing, and clean energy build-out. If a country that important starts keeping more metal at home, the rest of the world has to fight over a smaller pie. When Chinese prices run above Western prices, it's a big red flag that physical demand is red hot and the global market is feeling the strain. Put it all together and you've got a pretty wild mix. Investors expecting lower rates and more money sloshing around. Solar, EVs, and AI sucking up silver like it's a critical tech input, because it is. Mines struggling to expand or even maintain output. Inventory shrinking. China tightening its grip on exports and paying a premium. In that environment, silver at $115 an ounce isn't just a random spike. It's the price signal of a market that's been undersupplied and underappreciated for years, finally being forced to reprice in real time. It doesn't mean it'll go straight up every day. Silver is famous for its mood swings, but it does mean this move isn't purely about speculation. There are real, structural forces behind it. If you're watching this thinking, wow, I did not realize my solar panels, my EV, and my AI chatbot all secretly depend on the same shiny metal. You're not alone. Silver has become the quiet backbone of the energy transition and the digital economy, and the market is only just starting to price that in. Now, none of this is financial advice. Silver can be thrilling on the way up and brutal on the way down. But understanding why it's moving this way is the first step to not being surprised when the boring metals market starts behaving like a high beta tech sector. If you'd like more breakdowns like this on silver, gold, and the forces moving the markets behind the headlines, make sure you like this video, hit subscribe, and turn on notifications so you don't miss the next update.